We'll talk about the macroeconomic events that are going on. Futures are just absolutely getting obliterated right now. But a couple other things that could take down this market, other than what China's doing. Geopolitical events, as I brief my folks here at Top Gun Options, and releasing the CIA report, the long-awaited CIA report, which we could have waited a hell of a lot longer for, if at all, in my opinion. But that can be debated. Is going to be released, and that's going to do nothing but spur violence against United States interest around the world. So get ready for some potential volatility along those lines. We got 6,000 Marines on ready alert in case they're going to be needed in North Africa or the Middle East. Hopefully they're not going to be needed. So keep an eye on that potential developing event because that could throw some volatility in the market. But what's happening right now? The Shanghai was down about 5.4%, the lowest print since about 2009, on a whole host of things. Some profit taking. The Shanghai's up about 20% in the past couple weeks, which is just that's unheard of. Even after the other day, yesterday or Sunday nights, technically, trade data, the export data was just absolutely weak. But the market was still a bit higher a little bit. But today, you know what? People kind of woke up and said, let's take some profit here. I don't think China's imploding by any stretch of the imagination. I think it's time for us to take a little bit off the top. But strength is to be bought, not sold into. So I'd be looking to get a little bit longer China here. We talked about Japan's GDP worse than initially reported the other day. And Europe was imploding a little bit as well. One of the big canaries in my coal mine is financials and transports tend to lead us into and out of good and bad in the market, right? If people aren't getting loans, small businesses aren't getting loans, people aren't refinancing, buying cars, all that type of stuff, obviously that's bad. The other thing is transports, right? If we're not shipping, if we're not flying stuff on FedEx or UPS or the Port of Miami or Fort Lauderdale's not packed, that's bad. Well, the BDI, the Baltic Dry Index, is back below 1,000. That's the lowest print since 2008. So shipping is back at 2008 levels. That's not necessarily a very bullish sign. But the market just keeps getting bid higher. Obviously, today's an exception. But one of the reasons that we brief ad nauseum here at TGO is one of the reasons the S&P 500 has been going up is because the S&P 500 has been buying itself up. Okay, look at Apple. Look at the share buybacks of Apple. Look at some of these companies: ExxonMobil, Microsoft, Cat, Wells Fargo, Johnson & Johnson, Home Depot, Gilead, Time Warner, J.P. Morgan, Walt Disney, Yahoo, Cisco. Corporations who have repurchased the most stock in Q3. When you repurchase your own stock, folks, the price goes up. Okay, you're artificially inflating your earnings per share. That's not necessarily a good thing, and that is a snake eating its own tail. That's got to end eventually. You either run out of shares or you run out of cash. At the end of the day, what they're not doing with that cash is buying a competitor, launching new products, new services, hiring people, and that's not good. Okay, so the market getting bid higher on the market buying itself isn't a good sign. So I have a primary live trade brief this morning at 0900. I'm actually up here in Charleston. Beautiful Charleston. Well, it's a little cold, gray, and rainy today, but the city itself is beautiful. I'm speaking to Michelin, their North American Earth Mover division. So those tires that are the size of three guys standing on top of each other's shoulders, those tires. So it's interesting to talk to folks like this to get their take on the global economy, and giving a keynote this afternoon and doing some planning with their executives, and let's just say that it's not necessarily a great business environment, because these are those tires go on trucks. A lot of mining and large construction projects use those type of that type of equipment, and there's some pretty good canaries in the coal mine here. I'm looking at 2050, the next support level on the S&P 500. Looks like that might be in a little bit of danger. As you can see, for the past couple times, anytime we've seen kind of a pullback in the market, it's been bought. But if we go through 2050 with any sort of airspeed and the bleeding doesn't stop today, look out below. We're going to be in trouble if we break 2050 with a lot of airspeed. I think we're definitely going to break it today. But if the bleeding doesn't stop today and it continues a little bit, this might be the to channel my inner Fred Sanford. This might be the big one, Elizabeth. Hopefully you've been buying vol. When I said vol's incredibly cheap, remember we had an 11 print in front of this 14. So when vol's cheap, you buy it. When it's expensive, you sell it. I think we might even see a 15 print on the VIX today with this pullback. So we've seen an incredibly long period of low volatility. Okay, when vol's cheap, you buy it. When it's expensive, you sell it. If you were long vol, you're liking today. If not, I don't think this pullback is to be sustained, so we might actually get short vol here in our live trading session today. But we saw a good, call it a month and a half of low volatility, and now we might see a little bit of an uptick here. The other thing I'm taking a look at that might cause a spike in volatility is a potential government shutdown. We got some folks all the way out there on the right looking at trying to shut the government down because of the president's unilateral action on immigration. I don't know if that's essentially what the Republican leadership wants to do, but we might hear some saber rattling along those lines. But I wouldn't be too concerned. Okay, but hopefully you're hedged, and you hedge when I tell you to hedge. You should always be hedged, right? You should always be flying around this market with an ejection seat. So hopefully you're good to go. And today might be just a little bit of pain for your longs, but not too painful because your hedges are your bilge pumps, and on days like today, they kick in, they turn green, and you can maybe potentially profit as the market pulls back and takes a breather. Okay, so have a great day. Happy hunting. Make sure you hedge, and I'll be back with Wednesday's market sit rep again here from Charleston. We'll